Hi, Jonathan York from Bay Financial Partners, looking at investment markets. US market really waiting to see what comes out of the Fed meeting. While no one's expecting anything on rates, it's just going to be very interesting to see what commentary sort of accompanies that announcement, especially in regard to inflation. Now that's obviously on the back of a couple of big readings for the last couple of months, sort of over 4%. The last month was it printed at 5% for the headline number for CPI. What's also interesting as well, a survey by one of the major Wall Street banks has come up that 75% of analysts and economists agree with the Fed that this rise in inflation as the economy in states gradually reopens is temporary, transitory, and will start to fade in the next sort of 4 to 6 months. Now that's obviously a pretty big call, and it will be just very interesting to see how it does sort of play through, and then certainly the next sort of 3 to 4 readings. Certainly the US economy is pretty strong, although inflation is high, unemployment's probably not quite as low as they would sort of anticipated. They're still looking at about sort of 7.5 million more jobs need to be created to get back to sort of pre-COVID levels. What's also quite interesting as well is sort of the pent-up demand and the amount of sort of excess cash sitting around in households' bank accounts. Latest research out of Moody's sort of accounts for maybe 6% of global GDP. That's 5.4 trillion US dollars. Now, even if half of that is spent, that's a major boost to the global economy. And, given the sort of stress and sort of stretched supply chains, that is going to have some implications out there. Obviously, on the back of renewed optimism, oil is traded above 70 bucks. And again, just going to be very interesting to see how that sort of plays through. Potentially, it probably doesn't have too much more upside, maybe above sort of 75-ish, because certainly OPEC has quite a bit of excess supply that can still be given to the market. And a bit of a setback in the UK, and Boris Johnson has had to delay the sort of reopening of the economy completely. That's been pushed back by a further 4 weeks now. And that's really on the back of the spike in the sort of Delta variant that sort of come out of India. Certainly in the last sort of 3 to 4 weeks, UK cases have almost been doubling every week. And, now just a little bit concerned, just really need to get on the back of that. And also as well, hospitalizations have increased as well. And given that this variant is highly transmissible, I say they really do want to get on top of that. So the sort of full reopening has been delayed by a further 4 weeks. Europe's still gradually reopening, and just trying to keep on top of the virus, because really certainly most of the sort of southern European countries really need to be open by sort of mid-July to sort of be able to capitalise on the holiday period. Better news in Australia as Melbourne sort of comes out of its lockdown. Again, there are still a few sort of cases floating around, but they do seem to have got on top of the virus. And, that sort of partial lockdown over the last sort of couple of weeks really does seem to have done the trick. So now it's just going to be very interesting to see how it sort of plays through, because certainly the Australian economy again does look in pretty reasonable shape. The sort of demand for resources and minerals is really pushing the growth in the Australian economy at a pretty reasonable level. Here in New Zealand, as we come into earnings season, so far they've been pretty good. But then, given what happened sort of last sort of April, May, June time, you would expect some pretty reasonable numbers. If you're looking to get that maximum contribution from the government in the KiwiSaver, really need to check those balances very soon, and make any top up that needs to be made. And obviously the tourism industry, with that Trans-Tasman bubble now reopened, they are sort of looking for some pretty good news, especially as we sort of start the ski season, with plenty of visitors coming across the ditch from Australia to sort of take up some of the shortfall. That obviously should be a further boost in the New Zealand economy. But in this low interest rate environment, it is pretty tough out there if you're looking for income. Certainly TD rates are pretty low, bond rates are pretty low. And if you're interested in discussing what is available in terms of alternatives, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we'll look forward to speaking to you soon.